Okay, we have covered the understanding the conceptual framework, addressing a few commonly asked questions. And last week we touched on the trends to know whether the price more likely to go up, to go down. And today we want to touch on whether the price, if it go up, how much it go up, if it go down, how much it go down. Basically to see the ratio between the going up and going down probability. So it can be margin, support resistance or high price low price using Bollinger Bands, Fibonacci retracement or EMA, exponential moving averaging 25, 650, 100 and sometimes 200 days. Then only go for the strength. Okay, from previous, remember the three most important words in investing is the margin of safety. And after getting known about the stock fundamental is okay, and we look into the trends, we should look into the risk and the reward risk ratio. For example, like if we profit, we hope to profit more. If we lost, we hope the loss less compared to profit. Okay, we first start with the Bollinger Bands. Now this is how the Bollinger Bands look. There's a top BB, Bollinger Band, top line. There's a bottom line and there's a middle line. Okay. Now, Bollinger Bands provide a relative definition of high and low of a certain particular share price. So it answers to the question that is the stock now high or low? So when you want to have this question to ask yourself, then you know you should use Bollinger Bands. So generally, the share price are considered high at the upper bands, more than middle or near the top, and low at the lower bands. However, interpretation and actions can be totally opposite between these traders. What the trader is, he will sell when the price is the top BB and buy when the price top BB, the bottom of BB. However, trader B may do the opposite, sell when the price at the bottom of the BB and buy when the price at the bottom. You see these two traders also, both of them are making money. However, through my observations, if we follow this self-fulfilling prophecy conceptual frameworks, we find that KLSE, Hong Kong stock, and probably US and Singapore, most investor or trader will follow the traders A pattern more, that sell at when the price at the top Bollinger Band and buy when the price at the bottom Bollinger Band. Okay. Now, some traders also use the middle line instead of top and bottom line as a more confirmed signal to take actions. This single line that I show in the arrow. Right. So using middle BB, especially common for bullish stock with a higher high and higher low. Now this chart is higher high, meaning that the next high usually higher than the previous high. So you can see the stock is moving up. We touched about a little bit on this last week. And lower low. And the low will be higher than the lower low. So eventually, actually over time, it's going up straight in one line. You can see. So you can see that most of the price, they didn't reach the bottom BB, reach the middle, then the price go up, reach the price go up. Okay. So bullish trader may not have the patience. So that's why they don't wait until the price go down to the bottom. So we must understand that the share price will not go up or down by itself. The share price will also not direct up and down just by the company current performance. It's basically just technical supply demands or buy short activity happenings. And probably this group of bullish traders probably use the same common tools. So in this case, it's a middle BB line for bullish stock. They see the signal, they take the next action, and this impact the share price. So just like any other technical analysis tools, they should not be used alone. This is even the study proof that. So as is most technical analysis tools, always refer together with the candlestick and volume beside the basic fundamental analysis. So now look at the changes of the candlestick and volume of the previous charts that I show you when buy and sell action was warranted. So you can see here, Whether it's trader A, trader B, buy, sell, action only warranted with the changes of candlestick and volume. We show the strength. So in case there's a changes of this candlestick directions, the price closing up, there are changes. So you must for support together with all these changes. Okay, this will touch more detail in the next week session on the strength. Okay. However, Bollinger Bands could be less accurate in hot and highly volatile stocks. With those frequent price gap, they go up, suddenly they'll go down. A lot of profit taking activity causing the price drop, followed by rebounds in a very short times. Example is the glove stock, which we find that Fibonacci, retracement, and EMA are more accurate. Okay. So you can see I mark here a few spots that we can find that the Bollinger Band size is not aligned with the price changes direction. You can see here there's quite a distance from middle line and the price change. They haven't reached actually the bottom, haven't do a top. They not also reach the middle. Some they overshoot out or down. They're quite a distance here. So it become not a good predictable tools to be used. Okay. So perhaps again the only explanation I can say is basically they can be different type of stock preferred by different group of traders, and they use different favorite technical analysis to use. Not many have the huge capital to invest in the stock market. So some they are very familiar in oil and gas. They only use oil and gas. They only invest in oil and gas stock. So they may use a different tool. So use those you in volatile stock in the glove. They are so different group of traders. In the social media, you can see that those who favor the glove stock will keep on scolding that those in the white scene stock like Fibonacci is stupid. Then the Fibonacci favor stock people will always laugh at the glove stock when the glove stock price going down. So basically, there are different type of traders seem to be prefer different type of stocks. Okay? So about effectiveness, there's another study on how effective is a Bollinger Band, and they find that actually it's more effective in Chinese marketplace, so Hong Kong and China lah. Okay. So and personally, I think that for Hong Kong stock exchange, Bollinger Band together with 52 weeks high and low. I mean that in 1 year, the highest price compared to the lower price. Normally we'll say that today's stock price is about how many percent of this 52 weeks high price or low price. The reason we use the 52 weeks high low because Hong Kong stock exchange stock, this Alibaba, Meituan, Tianping, even the Tencent, the price in 1 year can actually go more than 100% up and down. So that's why 52 weeks can be a good indicators. And together with Fibonacci retracement and EMA 25. Okay. So for Hong Kong stock, using the AA stock mobile apps to find the Bollinger Band at 52 weeks is very easy. You go to the app, if you scroll down, it will give you the 1 day, 5 days, 6 months, and 1 year's of 52 weeks price. So you can compare. This Alibaba now is 307, it's quite high, but now it's dropping because of the end subsidiary cannot be IPO. Right? If you touch the graph at the bottom left there, then you'll get this thing up together for you, all the BB, volume, IS, and MACD up together. So you can see the Bollinger Band there. So Bollinger Band, you can see Alibaba actually drop below. So we see the 52 weeks. Then you use a Fibonacci replacement to see what is the good price. This morning I have a look on it, and I plan to go in if about 245. Okay, we can do a demo here. Let's check about this Bollinger Band for these different stocks, different type of stock. Fibonacci, Public Bank, and Hibiscus. So this is a Fibonacci stock. How we can do the setting is press the FX. Then we don't need to put Bollinger Band. Just put BB will do. Then it will come up Bollinger Band here. Click, close the window. Then you see this band come up. So this is considered a normal stock before a few hiccup of the rising news. So you can see before any special news, they are quite follow the Bollinger Band quite well. Of course, this is when it's volatile, it will call out, then you cannot use on that. But overall, still can be used as a guidance. Okay, now if you look into this public blank. You see the public blank, if I use the Bollinger Band, maybe you can see that it's hard to use a Bollinger Band to have a reference because it's running out all here and there. Because it's price has been changing here and there like this, especially this one. So you don't know, supposed to go down or what. Is this high? Is considered high price? It's still going up. So when it's too volatile at this moment, then the problem. Before that, it's still okay. When you have this, suddenly the Wysin say coming up, or all the banking news, all the bank industry doing well, expected to do well soon. So this thing happening, way out. So when high volatile, we cannot use Bollinger Band anymore. Now look, another example for you is oil and gas. Hibiscus is now nobody interested about oil and gas because the Middle East of Saudi Arabia is quite failed in controlling the oil price. So okay, then let's delete this one first. Okay, this is the hibiscus. You log into using BB. Now you can see that basically it provides no meaning to you because the gap is too low. So this price, let's say 545, you find it's going to drop. How much is going to drop? So it doesn't any value. You don't. The margin of this safety is quite narrow. Not say narrow. The risk ratio is quite equal. So you don't really see anything much. Gain also don't gain much. Loss or gain loss much, which is logical lah because the stock is not a non-trend. No up and down. No, of course, if you don't earn money, you also don't lose money. Yeah, lose money. So that's the thing when Bollinger Band when apply on a non-trending stock, it doesn't provide any clues to you. Okay. Because generally, normally, no trending stock we don't invest. Okay. Now we move to this Fibonacci retracement, which focus mainly on support and resistance. Now this is how the Fibonacci retracement look like, the multi-color one. Okay. So it used to determine the support and resistance level. Remember, the Bollinger Band is just to determine high price and low price. When you high price, it doesn't mean there's a reversal of trend. Okay. Well, Fibonacci retracement is about this possible of this trend what call it reversal or rating the support and resistance. To be accurate with support and resistance, I wouldn't say trend reversal. Trend reversal very much depend on MACD. Okay. All right. It used to determine support and resistance level in a certain chosen period. How long is a period is very subjective. I would see it's as one era of the event. For example, now is this just during pandemic of this COVID-19 pandemic. So I will normally choose the time when they have to crash down in the March time until today. I will do more on that. We put on the time until here. Okay. It should not be lowest, either lowest or highest point. It doesn't matter, or high low point. But basically, it's from the left to right, from the past to the present. So we choose one era or period. So for this, at this moment, it's best to choose now during the March lower point or higher point at that time. If let's say now it's 2021 January, then it will be some time from the March this year already. Then we can use about 6 months, or maybe from September to whatever, or from June onwards. There will be more IQ on that. Okay. You can see every bar of this color here, or this color, it provides you one resistance and support. Okay, so resistance here 9.77 because it's the latest price, right? So support would be 7.6865. So every bar will provide you a level of support and resistance. Okay, and from here, this is the price. This is the percentage of the trace. This is Fibonacci's numbers lah. Fibonacci numbers. So basically, it's about 23.6% retrace from the original price. Okay. Okay. Now, however, the decisions buy and sell must not be made mainly based on the Fibonacci retracement alone, without taking the pattern of the candlestick, 1 or 2 day candlestick, and also this volume. So you can see here, long candlestick and higher closing price, I mean green color, one more long, some more, breakthrough resistance. I mean it breakthrough very strong. So this will become a new support already. So this is a good sign to buy, good sign to buy. Come on, okay. Sometimes they have this price gap. Remember, beware of the price gap, huh? Then it provide you that come here, you find that it may be difficult to go up. Huh? Price facing strong resistance, so make it sell first. You can collect later on. You can see this line is quite extraordinary. It's a shadow. Signify price drop pushed up strongly by resistance 5 or 6. It's very fast. In no time, it come out already. In here, hit and near the support. Higher closing price, long candlestick, I mean, it rebound. It come down, it rebound, it come down, rebound, it come down, rebound. I mean, it's very strong support here. So it's time to buy at this point. Okay. This one is a general breakthrough. You can see all the green go through one. Of course, it's a positive sign. There's a price gap out here. So they possibly give you a fall buying signal. You buy here, I drop. Possible because of this, the price gap losing the momentum. Okay. Here show the breakthrough support. It go down, just now go down, but go up, just go down. It's a quite long distance, red color. Then it possible this support not able to support the price and the price will going down. So it's actually a sign to sell. So it must be interpreted together with 1 or 2 day pattern of the candlestick. Okay, to plot the Fibonacci retracement, later on we will do a demonstration together the EMA later. This one is a trading view. What we do is we find this mark, this the fork mark like that. Then to choose the Fibonacci retracement. There are some other Fibonacci. Might go for Fibonacci retracement. Same, this is for the KLSE website, about similar. Then we go for the lowest higher point from left to the higher lowest point in one era. We'll demo this later on. Okay, now we move on this exponential weighted moving average. Okay. Now EMA, E stands for exponential, MA you know moving averaging. Apply more weight to the recent data compared to our MACD. So I mean, it's very good for trading stock, something stock that go into new era, like related to the COVID-19 post-crash huge changes. So we give you the recent data. If you're using MCD, it may give you the longer previous before the event happened, compared to SMA is this simple moving average. Okay. So it can be used also to indicate trends and support resistance. But in this topic, we talk about more on the support resistance there. They are also the golden cross between certain EMA crossing certain cross. But as I already used that one. So you can see here, when you plot, normally they are different colors. See your setting. EMA 25, not see in on top, sometimes they are all mixed up. So here, I didn't show here, this one I'm not sure in 200. Normally in this trading, it will give you 25 day, 50 day, 100 and 200. Okay. So when the EMA is falling down, it will act as a resistance. When it's going up, it acts as a support. I see the support here. Here become even the same line, it becomes a resistance here. Okay. So this chart shows the combination between these Fibonacci's retracement and EMA. You can see this color bar Fibonacci retracement together with the EMA, this three line. So it provides you the multiple support and resistance reference. This is good for those closely watch high volatile share stock, hot stock like Glove. So this one is from here. I enlarge it to show you. Instead of one support, now you can see another support here. So some of the stock, you see stock here, there are something between this line and this line. So there are two group or more traders using either one. So they can't agree with each other. Some define this resistant, fine, it can be resistant. Okay. Like I mentioned last week, which one you're going to use is very much depend on your fundamental analysis. If the latest news, latest positive news, of course you don't wait. If there's some no news, you may have to wait using the Fibonacci. Okay, see the support resistance, they give you multiple. Okay, so this will provide answer to what type of question? To this type of question. What is my margin of safety to enter or exit the stock now? See, should I cut loss now or should I enter stock now? And if not, then how long or at what price should I wait? You answer these two important questions. So we had your mind have this question, then you should look for Fibonacci retracement or EMA. Okay, to plot EMA 25, 50, 100, 200, it come in one plot together for 4. This is in the trading views. I don't find it in the KL screener. I didn't know how it's KLSE. So same in TradView FX. Then you go for EMA space 25. Then you look for this 25, 50, 100, and 20, 200. Okay. Right. We can do the demonstration now on this Fibonacci retracement EMA 25 for cosine hibiscus. Okay. This is hibiscus. Okay. So this symbol, Fibonacci retracement here. Okay. Then you see your cursor changed to the cross. So look for an error. So I will put here. You don't go for here. Put here. This is the lowest point here. I put lower point instead of higher point because here is higher. We put higher and lower. This is higher, highest, highest here. So you can put here, doesn't matter as long as this line is here. Okay. Click. So this one is here. This one can move. You still can move. So this one is here. This side. You can see my mouth. And this one is here. This one. Okay. This part. Okay. This part. So this part to this part. Not to this part. This part will be wrong. Okay. Not this part. The highest here on top. Okay. Because the higher we come, the first resistance. First resistance doesn't bring much, but basically he tell you that if a lot of people buy from here, then difficult to go out here because they want to throw it. Okay, they are caught here. Okay, so okay, this is how you plot it. Then you interpret it in a way. Remember, this is hibiscus. So you can hibiscus work always hit here. It's difficult to go up. Okay, you see this EMA. Okay, space 25. Here. Okay, you see the 25 is bottom, is still on top. When this happening, it shows that the stock actually is going downtrend. Normally, in this case, people won't trade this stock. It reverse to the opposite. Okay, so it means that it will come here and go up. Okay, this is simple. I'll show you the cosine one. Cosine one is went through quite a number of support and resistance. Now, this is cosine one. Now, without any technical analysis tools, one basically coolers, we don't know whether this price is going to drop furthermore, to drop until how low, or to go up and go up until how high is it. So basically, you don't have any clue, any sign at all, even though the sign may not 100% correct, but basically you just based on the gut feeling. So if we plot the Fibonacci here, okay, go to here, this is the lowest. This is the highest. You can stop here, doesn't matter. Then after that, you can move further more. Go to here. Okay. Then drag here until reach here and make sure this here is as good as possible. Okay. So you can see that from here, from time we start here, you can see initially we expect when the reach here is to go up, but it go down furthermore due to certain external news, whatever. And some traders have been waiting for this to enter, but it go down some more. Even go down some more. So sometimes it depends on fundamental analysis and any positive or negative catalyst news. It may go through one by one. But every level will provide you the gauge to go up. So if here to here, it will always that it's a bit unlikely to go until down. So it provides some gauge here or here to go up. Okay, like in today's case. And it go up, okay. When it come here, go down, we expect to stop here, but it didn't stop here because the Weinstein news come out, so it dropped further. So we were not sure whether he will drop further here. Okay, now we do another EMA to provide more indicators. So when EMA come in, then it's telling you that not to wait until here. You still can wait until here based on your own judgment, but you got choice. But at least you know, you want it to drop. Actually, when now the buy come to here already. So either you want to, this could be the support. You see, when this thing come down, it go up there. So this is one support, and this support here, somewhere here. So from here, this quotient, at least I let you know that the chances for this price to go down, this is EMA 200 already, the lowest already, chances is quite low already. Logically, probably is quite low. unless there's a huge disaster compared to going up here. So the chances is quite low. So we can say that actually the margin of safety is quite high. Going up, it going up from here. If the price is here, going up is so big compared to going down. And now when we reach here, at the time I buy is 5.6 something. 5.6 something. So it's about to go up. There was a quite long candle there. So we have confidence that most likely will show up. Again, tomorrow it may go down, go up, we do not know. But the chances for it to go down, possible, but the range will be lower compared to going up. Because it has been going down quite a big gap here. And the only thing that fall down is basically just a vaccine news, not because of other things. Yeah. So we quite confident that the price will go up in a short period of time. Okay. So this is the end of the third section. We touch on the technical analysis margin. Of course, this is solely my what my preference. Okay. So okay. First of all, is for us to identify what type of stock. Is it non-trading, normal trading stock in KLSE or Hong Kong? Is this a higher high stock, higher low stock, or volatile low stock? So if there's no trend stock, basically we try a wide trading in such stock with the margin, and most of technical analysis a bit irrelevant unless the RSI and stochastics slow. For example, today's oil and gas stock. Normal trend stock like today's consumer stock, but before vaccine success news come out, we can use the Bollinger Band. Normal stock in Hong Kong, Bollinger Band together with the 52 weeks price. If the stock like tech stock, higher high and higher low, don't wait for the bottom BB, using middle Bollinger Band as a guide. For volatile high stock, hot stock, for like glove, then Fibonacci retracement and EMA would be a preferred indicator. Now, all indicators the same. We always refer together with candlestick and volume beside the fundamental analysis. So assignment 3 have been emailed to you. So same, using your 2 or 3 company they have, and continue with this what we learned today, the Bollinger Band, Fibonacci retracement, and also this EMA. But first is try to identify what type of stock first. Then only you find that which indicators will be prioritized to give you a more accurate indicator.